The White House said that US President Trump is optimistic about striking a trade deal with China, even as the world's two largest economies clash over tariffs. The bigger impact of the escalating trade war will be on African nations who are already reeling from US aid cuts. The UN Trade Union says that global trade could shrink by 3%, with significant long-term shifts in trade patterns and economic integration. The UN agency added that least developed countries are most exposed to instabilities, referring to the poor sub-Saharan African nations.
Global trade could shrink by 3%, with significant long-term shifts in trade patterns and economic integration. For example, exports from Mexico, which have been highly impacted, are shifting from markets such as the US, China, Europe, and even other Latin American countries, with modest gains instead in Canada and Brazil, and to a lesser extent, India.
Trade policies play a vital role in shaping international trade and the world economy. Both the US and China are important trade partners of sub-Saharan Africa. These economic and trade relationships are materialized through different agreements over the years. However, the uncertainty in Trump's tariff play is weighing on the outlook for African nations. The tariff uncertainty is upending global supply chains and weighing on the countries that need the most amount of help currently. The possibility of changing trading patterns is also emerging. China is eyeing African countries and other Asian nations for increased trade amid a tariff showdown with the US. Still, the World Health Organization warns that many countries face double whammies from US policies, including tariffs and aid cuts.
Yes, the tariffs are a big problem, and the problem is also that when it comes to sub-Saharan African nations, some of the poorest nations with the smallest economies, the weakest economies, seem to have been the worst hit. So countries such as Lesotho, Madagascar, Cote d'Ivoire, a large chunk of their GDP could be wiped out by the tariffs if they continue, if they're sustained. Most of sub-Saharan Africa is reliant on imports of pharmaceuticals. The continent is a net importer of pharmaceutical products. And so if you put this together with the fact that the more general financial crisis, devaluation of currencies, depletion of foreign exchange reserves, and very sticky inflation, if you put all this together, really the bill for importing pharmaceutical products is going to get bigger.